Welcome to the third episode of my workshop, no market replay, no backtesting, and no offline chart. We will be trading on live market, analyzing using cumulative volume, delta volume profile, and price action. We are looking at NASDAQ almost near all-time high. Let's draw our lines and find passive and aggressive sellers. In the 1 hour chart, we have one high at $30,380. That's all-time high as of recording. You guys can see that the price came short to take that high twice. Now let's go to 5 minutes if we can find a short opportunity to sell NASDAQ. Over here, that high is also visible with the yellow line. On the other hand, we have a short-term high in here that the price did actually tap above it. This high happened at 6 p.m. Eastern time yesterday. That makes it fragile. It's not all-time high, therefore the London session had enough strength or liquidity to tap above it. If I go to 1 minute chart for execution, we see that we have a wick and a sell-off. These sell-off shows we do have passive sellers in the market. Furthermore, the wick shows us we do have passive sellers. So over here, both passive and aggressive sellers exist in the market. I just executed a trade because I don't want to miss this opportunity, but I will explain why I take this trade. First and foremost, let's have our market volume profile from this pivot low to this pivot high. You guys can see the most traded area is at 30,362. That's the point of control. That means in this from this pivot low to this pivot high, the most traded price with the highest volume is at $362, adding credit to our bearish bias. On the other hand, we have 1, 2, 3 bullish candles in here, which I want to know if these bulls are trapped or it's a continuation. For that purpose, we use a simple box tool to highlight it. I'm going to extend it to the right and see the market behavior or the candlesticks behavior during that period. I adjusted my stop to $70 and I want to have my TP for now in here until we see more price action. So over here, let me explain again, because before a trend reversal, institutions, they tend to hunt whoever went long at the highs and left the stop losses below. Those stop losses are the liquidity for the institutions to close their positions. They need a liquidity area to make sure there's enough buy orders at the lows so they can close their sell positions. In this scenario, I highlighted these two bullish candles. The range gave me a mean threshold at $360. If I want to see and make sure sellers are aggressive and they are determined to push the price lower, first sign is a wick as soon as the price enters this area. If this candle was closing higher, I'd be noticed or I'd be notified that no, sellers are not aggressive or passive enough, or they don't have enough strength to push the price lower. But in this case, we always see that a wick and then the sell-off resumed. Another clue is for me to look at these buyers in here. This is the last time or the last chance to enter a short position. That's why I executed 2 micro contracts in here and I kind of rushed into it. Over here, once again, you see we have a chain of bullish candles. They failed to close half of these 3 bullish candles. That indicates that sellers are very, very determined to push the price lower, considering the point of control is also at the highs. We have the value area low where my target is. Now I can move my stop slightly lower, leave it at the high of this candle, because if the price closes and stabilizes above the mean threshold, the trade is already invalidated and the price can potentially go lower. For more options for profit taking, I would like to see the lows. We have relevant equal lows in here. Give me a moment, guys. So I have 2 micro contracts. I want to close 1 micro at the value area low. This area can provide support, but we have equal lows in this portion of the chart which I would like to mark it with a horizontal line, and that's the final target. So let's see how this trade plays out. If you guys have any questions or any part of this strategy that you did not understand, please let me know. But don't worry, once the trade hit our levels, I will go through the same setup again and explain everything from the beginning. Maybe I can add one micro contract here. I don't have enough margin. Yes, I don't have enough margin. This area is a very good target because they are equal, and equal lows, as we know, or as I explained in the previous episodes, they are thin liquidities. The more the price taps into liquidity or taps into resistance or support area, it makes the liquidity thinner and thinner and thinner till it is paper thin and the price can rip through it like a hot knife through butter. Almost to our target. That's the value area high. It can provide support. The price can potentially bounce from this area. It doesn't mean it cannot go lower, but a bounce is likely from the value area low. Okay, that target is hit. So while we have time, let's bring our stop to break even, make this trade risk-free, and explain this trade one more time. The blue line is all-time high. Look at this wick. A big sell-off. This wick shows the price entered a massive limit order area. We have passive and aggressive sellers in this portion. The price returned again to this area and we have another wick. This is 1 hour chart. We have another wick. As I mentioned, this area is getting paper thin in terms of liquidity because the price has been tapping into it multiple times. But based on what session we are, which is a London session, and we know London institutions and banks, they don't have enough liquidity to beat the New Yorkers and tap above $30,380. This is a probability. It's not a must. I'm not saying this happens all the time, but usually when New York makes a top or makes a low, and if they have their stops on those levels, low liquidity sessions like London or Tokyo, they cannot compete with those highs and lows. But over here this morning we have tapped above. Look at the time, it's 18, that's 6 p.m. So 6 p.m. is almost when New York session closes, even if it's after that. So New York session is winding down and we have a top. This top on New York PM session, yes, London can potentially go above it. And look at this wick. We have another wick again on this candle. That shows we do have passive sellers in this area. I zoomed into 5-minute chart. This is the high of New York PM session. Big candle shows sell-off. I go to 1-minute chart. I can move this stop to 50% and close this trade. I'm going to trail it here for $85 because I want to go through explaining, and I don't want this video to become longer. 90. Okay, the trade is closed. Okay, at the 5 minutes I measured the volume from this low to this high. I want to know if we have a ton of orders coming at the highs. It says yes, we do. 368 contracts came in this portion, but we are not sure. Maybe this could be a bull flag and the price can rip higher. Therefore I wait for the sell-off to continue, which represented in 1, 2, 3, 4, 5 and 6 bearish candles. That's a big sell-off. When I see that sell-off, I want to see what caused this sell-off, because these sell orders, they need fuel. The fuel are the previous bullish candles. So our previous bullish candles represent here. I am interested in the mean threshold. If the sell-off wants to continue and sellers are aggressive and determined to push the price lower, the next bullish candle shall not exceed or close above 50% of this range, which did not. But I did not sell here. I still waited for more confirmation. More confirmation requires measuring these chain of bullish candles in the 1-minute chart. Over here, once again, the price came into it and then another sell-off. I want to have a tighter stop loss, and I sold it at right at the mean threshold, these 3 bullish candles. The sell-off resumed. I closed one partial at the value area low of this portion, and the next one I closed in here, which is slightly below 50% of these bearish candles, because the price can consolidate before it taps below $30,287. This is a legit target, and there's a high chance for NASDAQ to attack this level and run the liquidity below this. I hope you liked this episode. If you have any questions, feel free to write in the comments. I will bring it up in my next live workshop. Till next episode, stay safe, stay observant, and protect your capital with stop losses. Have a good day.